Right. Hello, everybody. We are going to get started. It is Monday, March the 17th, and welcome to Money Matters with your host, Hung Lu from Cash Property. So we're going to get going today, and we're going to be looking at a slightly different calculation today. This one's going to be around the exchange rate. This has nothing to do with the situation that's happening in the US or the relationship that's going on with Canada and the US right now. This is happening because I'm looking at opening up a trading account, testing that platform out, and I have the option to open it up in a US account or a Canadian account. And this has a financial impact. Now, how big of an impact? We're going to jump into that calculation and I'll show you what that impact is. So, you know, I'm not a big supporter of diversifying outside of real estate, but when I come across an opportunity that warrants a little bit of looking into, this is what I'm doing. So part of today's session is showing you something that I'm doing slightly outside of real estate, just so that, as a fellow real estate investor, accredited investor, if you are looking at diversifying, looking at some ways to increase your cash flow, this may be one of those ways. Okay, so it's really to help us, make that next transitional move. Okay, so before you go into stock trading, of course, make sure you do what's right for you. Okay, now before we jump into the calculation, just a reminder, this Friday is our mastermind. And if you would like to get invited to that mastermind, shoot me an email. Okay, so here's a link to here. And you could also log on to Facebook and find us on our mastermind event page. And it's on the third Friday of every month. So that's happening. Okay, so let's jump right into it, and we will go into the exchange rate consideration when opening up a trading account. So as I mentioned, this is important because you have the option of opening up a Canadian account or an American account or US dollar account. And once you open that up, you don't really want to change it, and you could change it, but it's just a lot of work to go. So ideally, once you open up the account in Canadian or US, it stays that way. Okay, so let's go over here and I'm going to show you the question that I'm trying to answer here. So which is in this box here. So when opening up a trading account, okay, I'm just going to make this a little bit bigger as well. Okay, so when opening up a trading account, is it better to trade in US dollars or Canadian dollars? Now, because I'm Canadian, I do a lot of my stuff in Canadian. And so I'm going to be funding this account. I'm going to be opening it up using Canadian dollars. But I'm going to be trading on a US dollar platform, right? So I'm going to be taking Canadian money, putting it into this trading account, and it's going to be operating on a US platform. So that Canadian to the US dollar, one has to be converted first. And then at some point in the future, those funds that I'm trading on the platform has to be withdrawn into Canadian dollars so that I can use it. So when I open up the account, there's going to be a 1% trading fee automatically attached to it. So the fee is not the same thing as the exchange rate. Okay, so that's two different things. So the exchange rate is the exchange rate, but the fee is what we're really talking about here. So I should clarify that this is around the fees for exchanging, because I can't control anything about the exchange rate. But what I can control is which option I'm going to do in terms of the fee structure. Okay, so when there's a successful take profit on the trading platform, I will make some money. And if I convert that money into Canadian dollars at that point, I have to pay a fee. Okay. Now, so my option is one, I don't trade it or exchange it into Canadian dollars after every successful trade. I just leave it in there as US, and then that keeps operating trading on the US platform. And then once it builds up to a big, big chunk, then that's when I would look at withdrawing it in US to Canadian in Canada. With that option, which is the second option here, there would be an additional 3 to 5% fee from the bank in Canada. So the real question is, do I want to pay that 1% fee all the time as I'm taking profits? Or do I want to pay a lump sum fee at 3 to 5% at the very end? Okay. Now, if you sort of have an idea already what the answer is, that's great for you, because when I was looking at that, I'm like, I have no idea. Like, to think of it logically, like just in my head, I couldn't do it. So putting it down on paper was, or in Excel, was really important for me to be able to figure this out. So that is the situation that we're dealing with. Okay, so that's what we're going to be trying to answer today. Okay, so the exchange rate from $1 Canadian to US is 70 cents. So that means for $1 Canadian, I get 70 cents US. So as you can tell, the US dollar is definitely stronger than the Canadian dollar. So the other way to look at that is $1 will give me $1.42 in Canadian dollars. Okay, so I don't do a lot in the US. So for me, understanding this exchange rate is at a very basic level here. Like, traveling to the US, okay, take some US dollars. But even now, when we travel to the US, we're using our credit cards, right? And so there's that conversion that's done at the bank level. So I don't even think about it. So I put a couple of notes here just so that, so that you could follow along with my thought process here. So if the $1 Canadian to the US dollar, if the US value goes up, so if the 70 cents goes up to, let's say, 80 cents or 90 cents, then that means the Canadian dollar has appreciated because the Canadian dollar can buy more US. Okay. And if the Canadian dollar appreciates, then it means that the US dollar has depreciated. So you got to understand, okay, well, when the Canadian dollar goes up, the US dollar has to come down. Okay. So if the Canadian dollar gives me more US dollars, then that means that the Canadian dollar is stronger, or it has increased in strength. Okay. So the other way to look at it is that one US dollar is one Canadian dollar. So if my Canadian dollar amount is 142, that goes up to like 160, okay, then it means that the US dollar has appreciated because it can buy more Canadian. Okay, so these two numbers are actually the opposite here of what I'm putting here. So that's why I put these notes here, so that I remind myself what's actually happening behind the numbers. Okay, so let's just say I fund my trading account with 40 Canadian. So this Canadian has to be converted to US. And so when I convert it to US, I only get 28,000 US dollars. Okay. So as you can see, it's a huge exchange rate here. Okay. So now I'm going to change this back to 5. So the 5 is telling me, okay, during the month, I'm going to have 5 take profits. So that means I'm going to make 5 successful trades. Is that a lot? I don't know, especially since I'm starting off, I'd be happy with 5. Okay. At some point, which is why I was running the numbers at 50, because I wanted to see what the effect on the fees would be if I had a higher take profit number. Okay. So now with every take profit, I'm going to make about $100. So with 5 take profits, I'm going to make $500. If I increase this to the 50, well, then I'm going to make $5,000. Okay. It's a direct correlation with the $100 of take profit that I'm going to be making. And I've put in here a 36-month of trading time frame because I sort of wanted to see, okay, well, does it make a difference if I trade for 1 year or 3 years or 10 years in terms of the fees? Okay, so the green cells are the items that you can adjust. So if you wanted to start with more Canadian dollars, so one of the things that this program that I'm taking, they're actually suggesting to start with 100,000 US. So 100,000 US would roughly be about 140 Canadian. Okay, so if I had 140,000 Canadian, I could put that into the trading account, get roughly about 98,000 US, and that would be the starting trading balance that I would have. Okay, so now how does this go? How does this get affected with the 1% fee that the platform is going to charge me every single time I do a take profit? So what I mean by that is every single time I take a take profit, they're going to charge me a 1% fee to convert it to Canadian, and then I sit in Canadian dollars. Okay, So I fund in Canadian. So this is my option one, right? Where I take out the profits at the end of every single month. So I fund it in Canadian, I convert it to US when I trade, and then I convert to Canadian on every take profit. And my account is sitting in Canadian dollars. And then when I go to pull out that money at the end of the month, I've already paid my fee. So then I just pull that out and it goes right into my bank account. Okay. So there's a 1% fee for every trade that's on the platform. And if there's a 1% fee every time I go from Canadian to US. Okay. And this is on top of whatever the exchange rate is. So I'm running the scenario here. So you'll see this here. So my funds to Canadian, my funds in Canadian is 140, going to US is 98,000. So I'm going to pay a one-time fee here of $980,000. So assuming that I don't touch this, I don't have to insert more money, I pay $980 right off the bat. So then afterwards, I would have about 97,000 to trade on with the platform. Okay. So every single month, I'm going to see a five take profits. So I'm going to make $500 in revenue. This is in US. I'm going to pay $5 in fees to convert it over. Okay. And that is based on this $500 of take profit times my 1%. Okay, because it's a fee on the amount that I made. Okay. And then I'm going to have, so then my profit after fees is going to be $495 instead of the 500, so 495. So my revenue at the end of the month, okay, is going to be in Canadian $707. So because I've done the conversion already here at whatever the exchange rate is. So now my fees in Canadian is the $7, this $5 converted to Canadian. Okay. So I'm not charging myself another fee on the 707. It's just taking the $5 and saying, okay, well, how much is that $5 worth of Canadian dollars? Okay. So now if I trade it for 36 months, my total fees would be $257. So very very minimum. Okay. And really the biggest fee here is that one-time injection of the funds into the account. So not a huge amount here. So let's run this now with option two, which is looking at what if I was to leave the funds in US dollars after every take profit? So I'm not going to be converting it to Canadian after every take profit. It stays in US and it builds up, builds up, builds up. I don't withdraw anything. And at the end of the 3 years, that's when I would be looking at withdrawing something. And the 3 years is just a fictitious number I've pulled out just to say, hey, you know what? What do the numbers look like? So keep in mind that when I put the money into the account the first time, I do have to pay the 1% fee, but then I don't pay any more fees until the end of the 3 years. And at the end of the 3 years, I would be looking at a potentially 3 to 5% from the banks. Okay. And that's based on when I was talking to the platform trying to figure out, okay, is it better for me to go with option one or option two? Right? Like, is it better to pull out the funds every single month if I wanted to do it? Or is it better to just leave it in? Okay. So now, of course, both of these are two very different strategies in the sense that, well, if I'm pulling it out every single month, then I'm using it for something, right? Whereas if I leave it in, well, then I'm not accessing that cash to go and do something with it. Like it's going to stay in there, potentially buy more contracts and so forth like that. Okay, so in this scenario here, we're going to fund it with the 140. We're going to convert it to the US, pay the one-time conversion fee. So we also have $97,020 at the end in our platform. So this doesn't change between option one and option two. Like everything up until this point is exactly the same. Okay, so now we're going to have five take profits potentially. And so our revenue for that month is 500 US. Now, this is where it starts to change because now we're not paying a fee on every take profit. We're just leaving it in there in US and we don't touch that for, potentially 3 years. So what does that number look like? So here's the thing. So let's just say now we the fees after the US is still 500 because we haven't touched it. After 3 years, our total revenue is going to be $8,000. Sorry, $18,000, 18, 1 8. So this is because we're assuming we're only doing 5 take profits every month for 3 years. Okay, so I'm going to show you what that looks like when we go up to, like, say 50 take profits a month. Okay, how realistic is that? It could be. Like, I've been hearing people get anywhere from around 25 to 40 take profits, depending on how they operate their program. Okay, so at 18,000 US, so at that point, we would pay a one-time fee. So this is, we're going to take $18,000 out of the account, and the bank is now going to charge us 3%. So I put 3% here as a minimum. So the bank's going to charge us $540. Okay, so after our fees, we get 17,460 in US. We convert that to Canadian. Okay, so then our Canadian fees during that 3-year time frame is $771. Okay, so now compare the two numbers. This 771, okay, I'm going to choose a different color here. Let's go with orange. Compared to 257, okay, because this 257 is also after 3 years, okay, and so you could see it's $500 that we're talking about, at 520 bucks. So not a big deal in the whole scheme of things, but it does affect your ROI, okay? So now let's just say that we run this and we have 50 take profits, okay? So everything automatically changes because there's built-in formulas. So now we're just dealing with a factor here of 10, right? So from 5 to 50, so a factor of 10. So the fees go up proportionally. So if I was to do option one, where I was to take out the funds, do the conversion every single time with the take profits, I would be paying 2,500 compared to the end where I'm paying a 3% fee, right? So this to me still doesn't really make a lot of sense, because you would think with every single take profit, if I'm paying 1% and I'm doing a lot of take profits, this fee would go up and at some point would be more expensive than this 3%. Okay. But then I have to remind myself that this 3% is on the total amount that I'm withdrawing. So if I have more take profits, I'm going to have more revenue, more potential cash to withdraw. So here you can see my revenue at the end, is 180,000. Oh, so this one is not per month. Let me just make sure that that's not per month. Yeah, that's not per month. Sorry, this should be the total revenue for the whole time. So let me just make that update here. Revenue total. Okay, so the reason why it's so high is because, oh no, what happened? Oh yeah, 249,000. Okay, so at the end of the 3 years, I'm going to make $249,000. And so that's why my fees have gone up in proportion to that 3%, because it's on the total amount that I've made. Okay. So now let's just say we run this and it's not 3 years, but 12 months. Does that make a difference? Okay. It doesn't make a difference, right? Because it's the time frame of how many take profits we're going to have. So it's in proportion. So in this case, if we had the 50,000, if we had the 50 take profits, then our total fees at the 1%, if we were to convert it every single time, would be 850 compared to the 2,500. So it's still better to go with option one. Okay. So now let's just say we're going to go back down to the 40,000, because this is what I'm thinking about starting with. Okay. Does that affect anything? It doesn't, because it's all in relation to what my take profit is. Okay. So the more money you put in, your ROI is actually going to go down. Like, you want to have less money and more profits. Okay. As you can relate to the ROI calculation there. Okay. So now the other thing that I want to share here with this is, what if this 0.7 US dollars for one Canadian dollar changes. Because so when I was talking to the platform, they said, Hong, you're new to trading. It's already going to be so hard for you to trade, right? Because you're learning all this new concept stuff. Don't worry about the exchange rate. Leave that and just focus on the trading portion, which is to me very sound advice. So, but what if the US amount here goes up? So we're at $1 at 70 cents. Sorry, yeah, one Canadian dollar to one US dollar. And we're paying $850 in fees, okay, just for the conversion. So now if this goes up to 1.9, so this number's gone up, so meaning that the Canadian dollar has appreciated because this Canadian dollar can buy more American. Okay, so that's how I have to remind myself. So at 90 cents US for one Canadian, how does that affect my fees? Okay, so what happened here? So the fees went down. Okay, and that is because when I converted my Canadian to US at the very beginning, I got more US dollars to trade. Okay, and so my take profit on this revenue amount changed. So the fees for the take profit doesn't change. That's still 1%, okay, and it's in proportion. But the reason why the fee amount has changed is because now I'm paying an exchange when I pull out my revenue of $550 a month, right? Because I made $5,000, but my Canadian profit is actually higher. Okay, so focus on this number. I'm going to change this number back to 0.7, and you're going to see. So this 550 is what has changed. Okay, so I'm going to go back here to 70 cents. Okay, so as you can see, my revenue in Canadian, okay, was actually higher, right? Because my US dollar was here. Okay, so that's why my fees are higher here because I actually made more Canadian. Okay, so that is the way to look at it. Okay, so that is all I have for you today. So out of option one and option two, which one's better? Option one is better. It is better to do your conversions and pay that 1% fee at every single take profit rather than leaving it at the end and paying that 3% at the very, very end. Okay, so that's what this calculation is telling me. So what this is telling me is when I open up my trading account, I should open it up in a Canadian account, a Canadian dollar account. Okay, so that is all I have for you today. A short video on how the exchange rates and how the fees on a trading platform could potentially affect your ROI. So if you like this, please feel free to give us a thumbs up, subscribe, depending what platform you're on. Thank you very much, everybody, for watching, and have a wonderful week and see you next week. Thanks, everybody.